Okay then, let's get cracking. So thank you so much for watching this webinar all about fast tracking your franchise. I'm Neil Ormisher from Danbro Business, and we've also got Anthony here from Fathom. Just a bit of housekeeping. We are going to be answering questions at the end, so you'll be able to see a Q&A box at the top. So if you've got any questions whatsoever, just pop them in there, and at the end we'll go through them. And also this is being recorded, so we'll be able to send copies of this after the event. So let's get cracking then. So this is all about fast tracking your franchise. So I'm Neil Ormisher from Danbro Business. We are a specialist franchise accounting firm. We provide a full range of accounting and tax solutions. Plus, we're really passionate about providing meaningful, timely, accurate data to franchisors and franchisees to help them track the performance. We really want to help them benchmark themselves against a franchise group also. And I know I've said it already, just so passionate about giving that data that's usually in the cloud, usually in the hands of an accountant, and really breathing life to that data and showcasing it so a franchisor can ultimately use that data to help inform. So to do this, we've been working on Danbro Analytics platform over the last year, and to really help us. So next slide, just a sec. Next slide. We've been working on our Danbro Analytics platform, and we've got some packages, and ultimately what we're here to do is provide like the timely information. So we realized we needed a platform to get that information in the hands of our franchisor, because when we looked at the market, franchisors had a varying range of getting information from the franchisees. It could be in Excel, some on Xero, QuickBooks, some on Sage. And we knew we needed a platform to be able to bring all this data together into one place and then be able to build out like KPI dashboards, not just your typical P&Ls. And we have these packages. Performance is the key package, and then when we move up, adding on stuff like cash flow forecast and enterprise. But what's really we've seen work in our main franchisors is the ultimate package, and this is what we bring in Fathom here, and this is really the icing on top of the cake for me is the actual benchmarking side of things and bringing everything together and a lot smarter, a lot more enterprise here. So we'll talk about that. So over to Anthony for him to introduce himself too.
Hi everyone, so I'm Anthony Gomez. I'm Head of Account Management at Fathom. I'll talk a bit about what Fathom is, but in my role at Fathom, I work a lot with franchise businesses and accounting firms as well. I'm actually an ACA chartered accountant. My former life was in a Big Four accounting firm, and I was using Fathom on a portfolio of about 1,500 franchise businesses, so quite a lot of experience in the space as well. Fathom is a tool that obviously Danbro uses, and basically Fathom takes all of the financial data from your accounting system and it turns it into actionable insights by visualizing it, by giving forecasts and budgets, by allowing you to create really useful management reports and sort of empowering you to benchmark and compare and rank different entities like franchise units and franchisees to help you really grow the business and ensure the success of the franchise.
Perfect, sounds great. So let's talk about today's agenda then. So today we're going to be going through how to manage a network more effectively, the benefits of using one singular accountant, talking about harmonized financial information, and then benchmarking budgets and ultimately supporting your franchisees. Whenever I think about doing any presentation or speaking to a franchisor, I try to think about what questions and what pain points are we trying to answer or solve. And today I'm trying to answer kind of thing. The questions I get is how can I manage my network more effectively, kind of like what that looks like, and what are the benefits of doing this. And really, when we think about the pain points we see across the network, it's not being able to get the data, not being able to compare like with like. because we're getting data in one format and we're not getting it in a timely manner. All the transactions, some are just calling it marketing, some are calling it marketing, advertising, that kind of thing. So to bringing it together and ultimately having this one unique set of figures that's consistent across your network is really what we want to talk about today. So to start off, we're going to be looking at kind of like the more effective network management. And what we're talking about here is if I can visualize sometimes what we've seen as a typical franchisor may have be getting data once a month, once a quarter, may not be getting it whatsoever. And what we're really all about here is providing real-time data in the hands of the franchisor. So not just profit and loss, which is great to have, which is the norm, but we're really looking at having more KPIs and that kind of like benchmark analysis and more data on customers and products and suppliers and all that kind of stuff. So first thing I want to talk about is the singular accountant. So on the next slide, we're going to be talking about having one accountant for your whole franchise. So I want to start off by addressing the elephant in the room, which is I'm an accountant and I run an accountancy firm. But ultimately, that's not what this is about today. When we have really looked at the market, when I think about everything we want to achieve in terms of providing this financial data to a franchise, one of the sticking points that comes up a lot is having multiple accountants. So if you had 50 franchisees, you may not even know who the accountants are, but there could be 50 different accountants, or there could be 20 different accountants. And the issue there is that every accountant's going to do things slightly differently. They're going to have different naming conventions, kind of like what we call a chart of accounts. They're going to use different software. They may even prepare the accounts slightly different in terms of how we look at sales, because I know there's a lot of nuances with some of the franchisors we work with, and really having a good understanding of how things work in that franchise is key. And really having all them accountants dispersed out in different packages can make this what we're trying to achieve really difficult. It's something we're really working hard on trying to crack, but ultimately, if you're a new franchisor, then my top tip would be to find a good accountant, work with them, map out the kind of processes with them, and roll that out to the franchisees. Another top tip is where we're seeing a lot more prevalent in the market is where the franchisor pays the accountant, and that's built into the managed services fee. So when you first look at setting your rate of your commission, it could be 8. You could work out some of the costs like accountancy and then build that in. And the big advantage there is then that you're almost it's a lot easier to work with one accountant. You're paying the fees. You can include stuff like bookkeeping, and it can really help drive everything else you want to do, because they'll be on the same package. All the naming convention will be the same. The bookkeeping will be done to an agreed date, so it could be 7 days after the month end, and you're going to be able to get all this data almost guaranteed. Some more quick advantages. If you're working with one accountant, we can have a lot of economies of scale. So when we work with a franchisor and we may have 50 franchisees, we can really embed a set structure of how to do the bookkeeping and to drive the cost down by looking at automation, where that kind of thing just wouldn't be worthwhile if you just had one client investing, a month in kind of automation and building it in. But we do that to the bigger franchises, automate everything so we can ultimately provide the information you need. Okay, on to Anthony.
Thanks, Neil. Yeah, so what are some of the benefits of harmonizing the financial information in the way that Neil was just talking about? And so it sort of really all comes down to what's in that purple box there. It's about meaningful decisions. Having lots of data is great, but it's all really a nice to have unless you can make decisions with it and do something differently to grow your businesses or make your business more successful. It's more than just sort of complying with business laws and tax regulations. We really want to sort of see businesses grow by using their data effectively. So having that data harmonized, if we look at the first grey box, it allows you to then set up a structure where all franchisees follow the same reporting structure, right? So we've got a much easier comparison that way. Let's take the example of a recurring report, a monthly or a quarterly report. If all franchisees are using the same report structure, you can look at 2 reports from different franchisees or 2 different units, and you're comparing apples with apples that way, aren't you? You can see the same bit of information in the same place, as opposed to the scenario that Neil was talking about, where you might have one report in one way from one accounting firm and one in another from another. You're having to look in different parts of each report to find the same bit of information, and they might be calculated in different ways. When you sort of got those apples for apples comparisons, it's much easier to see where decisions need to be made and actions need to be taken. Looking at the second box on KPIs there, it means you can roll out a consistent set of KPIs across all franchisees and franchise units. Those KPIs will all be calculated in the same way. They'll all be called the same thing. They'll all be calculating the same thing, and you can find them in the same way. It also means that all of the KPIs that are being tracked across the network are the ones that you want to track. There's nothing superfluous and nothing to muddy the water and add noise. It's all the ones that you actually find useful and the franchisees will find useful, and nothing more. Again, once we've got that consistent level and we can see each KPI in that way, it's much easier to make a decision and see what's going on. The comparisons in the third box there is obviously a big useful one that we've talked about a lot. When we can see in a consistent approach who are the top performers and who are the bottom performers, it's much easier to see where the actions and learnings can be made. So with those bottom performers, we can see, right, these are the few units here that are performing poorly on these KPIs or these metrics. So they're the ones we obviously need to address. That's much easier when everything is done in a consistent way. Conversely, on the top end, if we can see who are our top performers overall in a given KPI, whatever, we might then be able to say, okay, well, what are the learnings that we can take from how they're doing it and share that across the network? And then if everyone can incrementally increase because of the learnings we take from there, then obviously across the network, that's multiplied, that benefit is multiplied. And then finally, in that last box, we've got efficiency, comparability, and financial literacy. So on the efficiency side, obviously, if everything is being done in the same way and all the reports look the same and everything's ready built and ready to go, especially when you bring on a new franchise unit, then you're saving a lot of time there. You're not having to recreate the wheel every time. That's a big efficiency gain. On the comparability, as I've mentioned a few times, if everything's being shown in the same way and calculated in the same way and put in the same place, it's just so much easier to make those apples for apples comparisons. And then on the financial literacy piece, often we hear that, not everyone's a finance expert. Not everyone is Neil. So sometimes that accounting terminology can feel a bit like jargon, but it's much easier to understand and learn when we're always using the same term, when we're always using the same word for, a cash flow metric or a liquidity metric. Everyone can learn it easier, everyone understands it better, and we're all speaking the same language. When you've got 4 different terms with 4 different accounting firms for the same metric, it's much, much harder for everyone to understand. So it really improves the literacy as well there. Awesome. Next slide, please. Cool. So the other thing that we can do with sort of consistent and useful financial information is these multi-entity things. So obviously it's great to be able to look at things on the individual franchisee or franchise unit level, but looking at it across the network is even better, and it's one of the benefits, right, of having the size of a franchise group. So with benchmarking, like I said, we can look at the top performers, we can look at the bottom performers, where are the learnings to take, where are the immediate problems to solve. It also means that we can set appropriate and realistic targets. I'm going to come on to that a bit more on the next slide, but if we know that some units are performing this way and some are performing this way, when we set a target for another franchisee or another franchise unit, we know it's an appropriate target. It's not unrealistic because it's been done by someone else. We're not asking for something outrageous. The proof sort of really is there in the pudding. When we do benchmark, it's important to segment. It's unrealistic for let's take the example of a franchise unit operating in an airport forecourt versus one in like a high street. They're obviously not going to be performing the same. There'll be differences. One that's operating in Cumbria won't be performing the same as one in London. There'll be big differences. So it's important to segment your benchmark groups in that way and make sure you're comparing even more like for like apples to really get sort of the best insights. And that's something that Neil and Fathom really do well. On the consolidation side, obviously, it's great to see individuals against each other, but we also sometimes need to consolidate units. Maybe it's one franchisee, one individual runs various units, and we want to consolidate those, compare how that person does with all of their units combined, maybe versus others. It might be that we want to consolidate a region. How is the North doing? How is the East doing? How is the West doing? It also might be that we want to consolidate the whole network, right? We want to see what is our total revenue across the whole network? What's the size of the franchise business right now? What's the, if we're thinking valuations, what's the EBITDA and what's my multiples, that sort of thing. These things are all really important and much, much easier when you've got it all being done in one way. Next slide, please. Great, and then the final piece from me on this is around budgeting and forecasting. We sort of can't only be looking backwards if we really are serious about growing a business and making a business succeed. It is important to think forward and plan. Some of the reasons for that are we need to understand sort of what things we should be preparing for in the future. If we're creating a budget or a forecast and we're saying I'm forecasting revenue to be this amount greater next year than it is now, it might be that I need to bring on additional heads or additional assets, vans, whatever it is, to service that revenue. I probably need to start thinking about that before the revenue is hitting my order book, because otherwise I'm not prepared to deliver on it, right? It might be that if I've got a certain amount of budget for expenses, I know that, the rent is going to be that amount, whatever happens, that's a fixed amount. I'm going to be paying this amount on my utilities. So that means I've got X amount to pay on to spend on marketing or whatever other cost it might be. So it just helps with my budget allocation and thinking about how much cash or anything else funds I've got left to spend on extras. It also means on the budgeting side, if we're doing better than budget, could I stretch a franchise if there's a franchisee doing beating their budget? Can I stretch them even more next year? Could they be performing even better? And on the flip side, if someone's not meeting budget, that's similar to benchmarking. It's something that I need to address, something that I need to think about and chat to the franchisee about. It might also be that someone is thinking about an exit or evaluation, and obviously with your forecasting you can get to, right, I think my valuation is going to be this amount in 3 years time or 5 years time, so I need to be hitting this amount to get there, and that's obviously a big pull for a lot of people. Another big one, and sort of especially in the past crazy few years, right, is scenario planning. I don't think anyone in 2019 would have scenario planned a global pandemic, but we now have an idea that big shocks happen, and we've got some weird economic times at the moment too. So scenario planning is another really big one that sort of comes off the back of forecasting. We can say, right, if the world plays out this way, I think my revenue is going to be this much and my costs will probably go to that much. But if it plays out that way, then we'll have this set of results. And that allows me to start thinking ahead about what I might need to do differently. If it starts looking like, oh, interest rates are going up again, oh, they're going down, what do I need? Do I need to cut costs here? Do I need to think about, limiting my contracted hours, that sort of thing? So all these things are super, super important, and we really need to be thinking ahead if we're thinking about growing and being successful in the business.
Perfect. Sounds great. I love the segment, what you talked about then, because that's definitely relevant for a lot of franchisees who may have people with one area or two or three in the north, like you said. So I want to talk about the benefits to the franchisees. So we've talked a lot about franchisors and giving information to franchisors to help the franchisees grow. And really, this is really important for me, because when we think of a franchisee who buy a franchise, usually they're buying a business in a box. And what we've seen over time is it's someone who may be not feeling comfortable about setting their own business up. So they're kind of like going to a franchisor, they've got a ready-made model, I'm going to pay a franchise fee and it's going to work out. But that's not how it works naturally. A franchisor really wants a franchisee to understand they're in business on their own account with a big support network. And ultimately, by giving the franchisees this data as well, it can really help them really get to understand, as Anthony said, the financial literacy, and really understand the business world and what kind of levers you need to push to get better profit, talking about gross profit margin and things like that. And where we really see the Fathom coming in here is the benchmarking, because it's sometimes difficult for let's say a business development manager to speak to a franchise area and say your gross profit margin is not great. And just telling them that without any context isn't ideal, but showing them where they are on a leaderboard. So to say, yeah, you may be the top 25% for sales, but you're the bottom 25% for gross profit margin, and really showing them that actually if you focus a bit more on your costs and where you're buying your goods, that will really help. But actually visually showing them how it works, we've seen a massive benefit. So that's the whole idea, where we want to give the franchisee access to this data as well, and show them where they are in the franchise network on all the KPIs we talk about. So whatever KPIs we build out for a franchisor, we're looking at benchmarking each one of them and to see where they're at. But ultimately, it's just all about, for me, including the franchisee and making them understand the business and the numbers and how that drives where their performance is, because most businesses may just look at turnover to see as a metric to see their success. Okay, so one thing I just want to touch on is I wanted to quickly talk about we have a service who kind of like a flagship franchisor we work with, who really utilize all this, and they're called Accessible Offs. And what I love about Accessible Offs is that they really understand all of this. And when I always talk about that franchisor, because not only do they understand it, but they've implemented it with the franchisees. The franchisees are getting more information, and it's really helped them drive their business forward, and helps them even sell. When they're talking to a new potential franchisee, they're actually showing them Fathom. They're actually showing them a few franchisees, maybe someone who's been trading for a year or maybe 3 years, and that's been a massive value add for them, because traditionally a franchisor sometimes may just show them an Excel sheet of what may have not changed for many years of how they will perform, but actually showing them real live data has really helped them. So if there's nothing else Anthony wants to add, we can move over to our questions. Let's have a look. So I've got a question from Jenny. What if my network won't move to one accountant? Can I still achieve harmonization? So that's a good question. So this is a common problem for a more mature franchise. And absolutely, the answer is yes, because it's challenging, but the answer is yes, because systems like Fathom do link with most of the softwares available. So, and you can import Excel sheets. So if you have 50% of your network on Xero, 25% on QuickBooks, and the rest on Excel, for example, we can still achieve getting the QuickBooks and Xero clients automated and brought in, and then the Excel ones importing it. But ultimately, it needs a bit of an audit of where people's charts of accounts are at. And what you can do in these systems is have an audit of the chart of accounts and kind of like manipulate it in the back end. So without having to go to the client and say, can you move things around? If they're calling things different, kind of like put them in the right place. So I hope that answers that question. I've probably answered the question about another one from Jenny, does all the network need to be on the same accounting package? So no. So it could be Sage Online, Xero, QuickBooks, and all these kind of like systems link the same way, and obviously Excel as well. I'll let Anthony answer this one. So Anthony has a good question here. Should the franchisee or be telling their franchisees what KPIs and information to track? From Sam?
Yeah, yeah. So it's a good one. I would say the short answer is yes, but so I think, like Neil said, when a franchisee signs up to a franchise business, right, they're sort of buying a business in a box, right? They're normally not massively financially minded. They're more sort of business minded, and So they're not necessarily going to know the best financial or combined non-financial and financial KPIs to track. So sort of the onus is more or less on the top level, the franchisor, to be recommending those KPIs. And obviously that is much easier when you've got the advice of an accountant who can sort of say these are the KPIs that work best in a a franchise of your industry or franchises in general. The but is I think it's important to keep an open mind, because oftentimes the franchisees will have useful insights as well and recommend a KPI. I think we should track this. Sometimes they've come from running a different type of franchise business and now they're sort of expanding into a new franchise business. So they've got useful insights as well. And I think, everyone on this call probably knows this better than me, that one of the benefits of running a franchise business is that you've got the scale of the amount of people and insights and shared learning. So it's important to take on board what's being said on at the franchisee level, but it is, in my opinion, on the onus should come from the franchisor to be recommending this is what you should be tracking.
Perfect. And then just the last question I can answer is from Robert, all about how do we actually get everyone on the same chart of accounts, kind of naming convention. So for me, the starting point is to agree a robust chart of accounts, kind of like what we're going to be calling sales, but how are we actually even breaking down sales? So are we just having sales? Are we going to be having ladder sales, loft sales, insulation, etc.? So get that agreed, and then look at how we can get that data in that format efficiently through automation. And then once we've got that set one, we can draw a line in the sand and get new franchisees to use that. And then for the current franchisees, look at using the back-end system to actually kind of move them around in the right place. So we'd set the chart of accounts as the new one, and then someone's called something else, we just move it around in the back end so it goes to the right place all the time. I've got a final question actually from Phil, following on from the question from Jenny. What's your thoughts on, in a mature franchise, how to best persuade franchisees to swap to one accountant? So I would definitely say the how we would always look to do this is by the value add here. So what, rather than thinking of persuading, it would always be trying to get the first franchisee on board. So it could be new franchisees, map out the service so it is so efficient, and the data the franchisee is getting would just naturally, that the word will quickly spread once the franchisees are getting this service, and then ultimately the more and more value add you can give to a business, the more businesses will want to take up that service. But ultimately, we don't always want to have everyone have to swap accountant, because I'm a big believer, if you've getting a great service and you've been with your accountant for a while, I don't want to ever break that. So that's where we opt then to try and get the data in the right format and still bring it in. Hope that answers your question, Phil. Okay, that's the questions. So thank you so much for your time. We'll be sending a recording of this out to all the attendees. And if you ever want to got any questions or anything, you can just go to our website, so danbrobusiness.co.uk, and you can go to Fathom also. Me and Anthony are both on LinkedIn. There's loads of ways to contact us these ways. So any questions at all, if you need any help, drop us a line. Speak to you soon, guys.
Thanks, everyone. Thanks for joining.